Exactly.
I never thought about that, but I would say I did not know that
And
that's the.
that's not, it doesn't work perfectly, you guys. So, you know, that is a true thing. The computers want to go fill the orders. The market makers want to go fill the orders. So they're going to go to the direction of more orders. But that is not a perfect system. If it was perfect, we would have a bulletproof system of trading. You know, markets are inefficient, or people can debate it. I have a degree in economics that you can debate that they are efficient. But the reality is that they're inefficient. So it's not going to go straight down to the biggest orders to fill it right away, dropping like a waterfall. It's going to chop up and down and up and down. Okay. And it might be a day where there is more orders below, but then it's going up. So the market makers want to go to where there's more orders typically.
The market is efficient in taking your money away.
Exactly. Exactly. So,
Hey, here in big caps, then we usually say that there is less of manipulation. Like the market makers, they don't manipulate as how the small caps are being manipulated. So, does it still happen? The market makers do manipulate or run the algos, and they do hunt the liquidity, like in big caps also.
yeah, yeah. So
Huh.
the question was, on big caps, do they manipulate less than small caps?
Uh-huh.
And the answer is yes, but they still do manipulate. That's their
Uh,
game. You
mhm.
guys, what I try to do is look for the manipulation so I can have a clue on what the game they are playing. But on big caps, when it's Apple or AMD and the company's worth, I don't know, 100 plus billion
Billions, yeah.
dollars or whatever the number is, it's harder to manipulate the price and to do their tricks. It's harder to do it on a huge mega company than it is on a small cap that has a, you know, um, under $100 million, valuation, market value, and is rotated multiple times on the floor.
Yeah,
Yeah.
it's
Does
Mm.
that
it's a
make sense?
yeah, it's the book map. Sometimes the behavior is small big versus big caps a little bit different. With big caps, it's like they want to fill the big orders, so that and then they want to go past it because like I don't know, maybe there's like a lot of players in the stock, and there's just like a lot of resting orders that they need to fill
No,
anyway
no,
at the
no,
best
no,
prices that
no,
they can
same
get,
one.
and so the focus then shifts on what's going on the microstructure, like the book map. Sometimes you see it roll over on the micro on bookmap, and then after it's been breaking like maybe 1, 2, 3, 4, 5 heat maps, but that would be the sign where you're just looking when something is already exhausted, and then that's it. Then you just take your move if that's the one you're looking for.
If I'm a market maker and I'm trading a $500 million account, it's easier for me to make moves happen on a small cap. But if it's on Apple, which trades like over $1 trillion worth of volume and monetary value each day, uh, it's hard to do, right?
Unless you have a Twitter account like Elon Musk.
Exactly. But even Elon Musk couldn't quite manipulate Apple or Tesla. I mean, he could if he was, you know,
I'm just joking.
yeah,
I
yeah,
know
yeah.
it. Yeah, it makes
But you,
perfect
you
sense
get
to
what I
me.
mean, though, right?
Yeah.
But if Elon Musk decided with his trading account to go trade SGBX or whatever you guys were all trading yesterday, he could set some big traps. He could squeeze the stock and then send it down. But on Apple or AMD, it's much harder to do that. So here's what's interesting, you guys. So remember how I was telling you they put on this pressure when we know it's going down, right? And 110, they put on the pressure. Mark was asking, well, where's the entry and what's the clue? Here they put on the pressure at 110 and it keeps pushing it down. Well, look at this now, you guys. Here's 107, which was a big level, and now they're putting orders here below it. Why would they put orders below it? You know, instead of trying to get filled, don't they want to get filled into the price currently? Why would they put it here? Anybody?
Maybe they are sure, or they have propped it that that level would break off, and then it would be their time to get it filled. Like they were sure, or they had propped it.
Yeah, that is a possibility. But what I see here is that they're showing the other market makers and other people watching the level too, which are, you know, good traders that are paying attention to that, is they're saying, hey guys, 107 is a big level, but if you break through 107, you're going to have to take out these orders right here and these orders right here. So now we're trying to create some strength here. We don't want it to go lower. We want to start holding it up. Let's start to reverse this thing. Let's send it back to the J lines right now. So this here is a clue that they're trying to hold, you know, hold it up. You know what I mean? I know that's kind of confusing, and you got to pay attention to this, but it's the same thing with how we saw back here. Let's go back to the beginning. In the beginning, when we took out, so we took out this level, and then it struggled to go lower, and then when it starts to go up, as soon as it goes up, what do? They put this right here, and they put this right here. And this is kind of saying to the other market makers and other people, saying, hey, you struggled to go through this 111.25 level. If you go higher, I'm going to be right here with my orders to put pressure. I'm going to try to smack you down. Okay? And actually they were propping it up right here, which is interesting. But they have this pressure right here. And this is where it's like a sign that it starts to roll back over. And it's the same, this is like a very fast signal. Okay, and then once it starts to go down, they put the orders here, because then they know it's not really coming back up about these orders. It's kind of like spoofing or fake orders. They're not really going to let their orders be filled. They're trying to put it on the book to make it seem like they're going to be there. And then that same thing happens the same thing happens at 110 and right here. So this thing's going up, the orders here, and then it starts to go back down, because then they see, oh, we want to start moving the stock up, and then someone puts orders there, and that's going to sell it again. And so they say, okay, wait, never mind, let's keep going down. And then they put it at 110 here, strong orders, and it starts to go down. Okay, someone tried to hold it right here, it looks like, but then it starts to go back down. And then all the way back here at this one, and actually they happen right there with some microstructure right there. It goes up a little bit, they hold it here, it goes down, it goes back up. They put this order here to say, I'm putting pressure for you to go take out this liquidity zone. They like push it into this major zone. And then when we were just looking at it back here at 107, they started to prop it up. Okay, guys, I got an important phone call. Go ahead, Top take over for a second, or you guys chat amongst yourselves.
Hi guys. So 10:09, 10:09. So they took out. Does anybody have any questions on the book map on big caps?
Yeah, Tapta, can I ask a quick question? Kind of where I am in my trading and with Jay. So right now, so he has me, right, he goes, stay, once you're outside PDR, that's when you trade, right? That's where I am right now, right? So I guess I'm also hearing that the next level up would be, hey, once you're outside the pre-market high, pre-market low, that's when you trade. So I'm not quite there yet. So I guess ultimately the other one is, at open, that's when you that's also at entry. But the is the the again the area where you're outside pre-market high, is that how what's is that what you guys are doing right now, or how you got what you guys is doing on that?
Yeah, I mean, I trade anything outside PDR or outside pre-market high or low. Um, but it's gotta show me the trend, and I need the spy with me. If I'm gonna execute trades, or if the spy is not with me, I need the weakest stock that I can find, or the strongest stock, a market leader, or the opposite of the market leader. I need to be trading that stock, So that's sort of like my filter. So maybe if I'm trading, say, AMD or any of the big caps that Jay or the other guys normally trade, it's preferred that I have the moves I take is, correlated with the spy. But say, for example, maybe one day Tesla's leading, right? You're going to see it because Tesla's like shooting up and the market's going down.
Right.
If I'm in a scenario like that, if all the J lines line up and I'm outside PDR, then I will consider a J line. Um, be, Depends on what happens in the open, but usually between you know before 10:30, or if it chops in the open, I would consider the J line to happen between like 11:45. And then after that, I'll just maybe if I want to come back to the afternoon, I'll look for the midday consolidation, lunchtime
Got it.
breakout, and then reversal of the indicators that I look at, curl, and then trade up.
Sorry, guys,
But
I'm back.
yeah, you have to, honestly, what Jade tells you is to, that's what I do. Like I seldom trade inside PDR. I mean, if anything, it's just because I made a mistake or it's an accident. Yeah. But those are very effective filters because, like, again, if it's on breakout or above PDR, then you have a very predictable price action because it's gonna unwind, right? The chances are it's going to unwind if it's, especially if it's the strongest stock that you pick to trade for the day.
Got it, man. Thank you. Again, sorry, question. You mentioned SPY. You don't use ES, you use SPY?
Just because I don't have data for ES, it's the same thing, almost. So you may want to use Qs. But yeah,
Yep.
it's just the ETF
Right.
that tracks Spider.
Got it. Appreciate it, Top Tip.
So what else did you guys want to cover? Did that help at all with the book map? And does that kind of give you some clues? If you guys got some screenshots of your trades or a book map and you want to send it over, we can pull it up and just talk about it.
Real quick, going back to that sell-off thing, how about a different situation where, let's say, let me get my pen.
Okay.
This is the market open. Let's say
Yeah.
you have a level here. It's going up, green candle, right? Whoops, let's make that green right here.
Yeah.
And then it does a sell-off. My goodness, my pen. Like that. So instead of doing a stuff like what we all want, where it does this,
And then goes, yeah.
what do you look for? I don't have bookmap, but
Mhm.
obviously I could probably identify that on level 2.
Yeah, you
But
can.
what do you look for in regards to this kind of sell-off, or where you want to short, like right here, compared to obviously, where you short in the stuff?
Yeah. Well, the way you had it was, so like, let's say we had that level and it runs right into it, but it can't take it out. Kind of like almost how it happened here, but in reverse, like you're explaining. Um, if that's the case, then maybe it's good to wait for the new one. In your case, where it's going up, and then we're looking for a rejection. Maybe wait for the new 1 minute low, and then you set your stop above. That's one way. But obviously, trading off of the stuff uh, where it goes through the level, and then now it's going back below the level. I like to short it as close to that level as possible with the stop at the top of the candle.
Yeah, those are easy to get into, but the sell-offs, they've been doing a lot more of that these days. And I've been missing a good amount of trades because I'm like waiting for it to go above the level or an area that I like, but it like barely meets that level. It misses it by like a cent or sometimes like 3 cents. And then it just sells off. And I'm like,
Yeah.
So I was wondering, like, again, you have bookmap, what you see in the bookmap, if you do get in those kinds of sell-offs, what is it that you look for in order to confirm whether you should enter that sell-off
Well,
rather than wait for like a stop?
yeah, you got to be careful. Like on that first example that you drew, where it doesn't get through the level, you have to be careful not to anticipate it too much, because then it can kind of, oh, there we go. Yeah. So like this one didn't go through the level, right? Maybe it's better to short it here at the 1 minute low and some sort of trend break. So you have a different type of confirmation, because this thing could easily just go here and then curl back up and then take out the level, right?
Right.
So, and then once it dips back below, almost on this example, in this example, when it goes up and then back through the level, I like to short it as close to the level as I can. In
Exactly.
this example, where it's now not getting through the level, we don't know if it's going to, in the next minute or two, it just needs time to resolve and then curl up and go through, right? So you need some form of other confirmation, whether it's a new 1 minute low or a trend break, or you start to see more levels showing up on bookmaps. So like, let's say this level here, and then you'll start to see someone put a level like this and then a level like this above it. So it's kind of the signal on the order book saying, hey, if you take out this level, I just put levels here and here, you're going to have to take these levels out too. And that's what we just saw happen in reverse on this 107 level. It got down to 107, and then someone started putting orders here and here. And that's a signal saying, hey, the buyers are ready to start holding this thing up. We're not ready to let it go lower. We want it to either hold this level and curl back up, or if you take out this level, you're gonna have to take us out to these other micro levels or orders. So so that's kind of it. So look for that. Look for where people are putting orders in like almost odd spots.
Right.
Okay.
You usually see something like if I'm for those sell-offs when you're looking at the tape, even the book map with the bubbles, whatever. Do you see some form of soaking or any kind of indicator, like just even one that would show that it was gonna be weak for the next candle or for the red candle, or it's
Like,
just better to just wait it out and then do the trend line break or something else, or just avoid it altogether?
So you're saying, like, do you start to see soaking or some sort of indication that it's not going to go through the level?
Yep. Sorry, worded that but way better. But yeah.
Okay.
Yeah,
Yeah, I
so I would say with your question mark, look at level 2. If they repeat it, you're looking for a held offer. If you wanna if you wanna see if a level's holding, sometimes they flash, ARCA like 100, and then you see at, say for example 107, say they were selling off 107, right? They flash ARCA 100 or 500, and then you see the volume going on, and the time and sales is way more than what they're flashing in ARCA, and it's not budging.
That's
That's
a
a
hidden
pro-
seller.
yeah,
Or
exactly. So something like this would be nice to see, on your level 2 time and sales.
Mhm.
Also, you might want to consider that when you're trading, reverses like that, where are you going to encounter the first point of support relative. So that would just simply be looking at your chart. If you have at least like 2 to 1 on your first encounter, where it might, the chart might stop the price from going down. If you have more than two, then fine. But if not, then and you're not confident about it, then maybe just avoid, or just engagement, like mini engagement order, either with a wider stop, or if you want to just run it tight, if it works immediately, then just like run it near the level you enter.
Yeah, because I was thinking of something like, where you would put a fantasy order, right? You would either do a fantasy long or short in the area or level that you expect it to go. But just in case it doesn't actually go through it, you place it a few cents above or below the resistance or support. And then at least you can get in that way. But I'm not entirely sure. Like with the hidden seller, all of that, sometimes it like, what is it? It moves up there, it moves to that level or that level or that area in like the next last 10 seconds of that candle, and then into the second candle it just sells off. So it's hard for me to anticipate where the hidden seller is or hidden buyer is in regards to what the tape is showing, because at that point it just goes up there and it just goes down,
Then yeah, just use small
avoiding.
size to give yourself a little bit more room to go ahead and make the trade work out, I suppose. But and because I mean, if you have small size, it doesn't matter if they try to pop it for a few cents, because maybe you still may want to add 5-10 cents higher, right? So something like this. If you have already a planned risk level on the chart, and you just want to sort of like start in, at a certain point because you see something, then yeah, small order. I mean, you gotta know your pattern, the pattern that you're looking for. If you don't see it, develop completely, I mean, you either just simply let it go, or just create super small size. And if it works, great. And if it doesn't, you just keep it tight. Once it starts working,
Yeah, exactly. It's one of those things like I have a strategy that goes along with it, and then I have an area I want to short, and then that icing on the cake where I put my entry is that stuff. If there's no stuff, I
Yeah,
missed.
yeah. Remember that LVGN? We're trying, trying to short. What was
Yeah,
it?
bro.
Yeah. And then later on, we realized, wait a minute, it's 10:30. It's above market open. It's above the open. It's long, right?
Mm.
And then shortly after that, Jay and the other, folks at the chat saying average gap's 31%. So then it basically reversed at 12. There
Mhm.
we go. And they were on the money about it too. I'm just like, okay. Um, uh, yeah, that's why, like, when I was looking at it, I was shorting, but then I'm sure it's demo, but I flipped long when I realized that, and then took some profit at the 12, and then got stopped at the rest.
Yeah, for sure, bro. LGPN was fun. A different way.
She's crazy.
Thank you. Thank you.
I know for like on big caps, so it's different than small caps, but kind of what you're saying. Like this is the example of what we were just talking about in reverse, essentially, Mark, where we get down to the level, we don't know if it's going to hold up, and we don't want to anticipate it, right? So one factor is the time of the day. If it's
Mhm.
like really early in the morning, it might reverse and go straight up back up. You know what I mean? But if it's 10 o'clock or a little bit later in the day, I can safely say that maybe we're going to test this a couple times or chop around for a couple of minutes before it curls up. So here's what we're looking at right here on the chart. There's this one.
106. Okay.
Yep. There's this 107 level right here at first that's holding, and then we actually go and take it out right here. But this is that 107 that was holding. So we get down to it and it kind of chops, And then this is exactly what Top Tick was saying, but in reverse, we would start to see on the level 2 a bunch of bids starting to prop up. And maybe we start to see big selling bubbles. We'll start to see a lot of red on the time and sales, but the bid is still there and it's actually holding it. And though we're seeing big selling, it's soaking and it's not going down. So I've told you guys a bunch of times, it's the reaction, right, to the time and sales and the candle. So
And the time in sales for you is like speeding up, still fast, or is it relatively okay, or is it slow? What do you see
it
that you like, that you want to think is ideal for a potential reversal or an actual?
probably slower, a little bit slower, because what we want to see is it to consolidate and hold like it did here. If it starts to speed up and then it still barely goes down, then that's also a sign too. Usually it
Which-
speeds up when we're ready to break through a level, but it might have sped up. Like we have some elevated volume kind of right here and here as it's trying to get towards this 107. But even with the elevated volume, when I look at the volume candles and I see the elevated volume, I know that at that point in time, the time and sales was sped up.
Yeah.
It was a little bit faster, right? Because it's just more volume.
Sometimes I see it like this, where it goes up to that level, soaks it, then it rejects,
Mhm.
goes up, soaks it, and it's big size too. So
Mhm.
let's say like 10,000,
Yeah.
and then just soaks it to 7,000 and tries again, and now it's 33,000. And this
Mhm.
time, that's when it actually breaks and goes up. So
Yeah.
this isn't fast tape though.
So what I look for here in this is I want to start to see orders being propped up on top of it, or in reverse right here. When it went, it soaked, it goes up. It went back down, it soaked, it goes back up. And then all of a sudden someone else starts to appear here. And then what they're signaling to all the market makers and all the people is that, hey, if you take out this level, I'm going to be right here. You're gonna have to take me out also. So this is where you start to then see this consolidation. It went and tested it multiple times. It never could even touch 107 exactly. It did finally right here, but this guy appeared, and this is the icing. And this is what Jay really likes to look for. This is what I really took away from him that I thought was really important, is when you start to see this, then all of a sudden the thing starts to reverse. So,
Right.
and then here on this example, we actually took out 107 finally. And then what happens? It hits this guy that appeared. So this was a bigger order. This one is smaller, but then somehow this smaller order held it up. And then just to show you guys what's going to happen next is we go all the way back to the J lines. So we get this now. So we finally broke through that 107 here. And then that other guy that was right here that nobody could really see. You can't see from the chart if you're just looking at the candles. You have to look at the level 2 or at Bookmap. Then this guy held it up and then it starts to reverse. So they held it up here. It bounced. They finally did one more hoorah, one more big push down. This is signaling some like exhaustion, almost ending value. Like they pushed it down for so long here, and then it finally curls back up, and then it goes back down. And then now they used all their volume. They used all their gas to push it down right here. Then it doesn't go any lower, and then they finally can allow the buyers to start reversing it.
That just looks like a short trap.
It is kind of a short trap. I mean, here it kind of is, but
Yeah, like
this
right
is
here,
very
like
extended. Here, if this is pre-market low, this is very far away from here. So this is not really a great short because you're in this extension territory. Like even down here, this is still pretty risky shorting around here because we're just so far away from pre-market low. If we get down to here, what I like to do is say, okay, we need to return to the J lines. We need to at least return to VWAP. We need to let this thing cool off. It can't just go straight down unless, we're in a crazy day where war is happening and financial markets are collapsing or something, then it's going to go straight down, right?
Doesn't the trade the matrix thing still apply for big caps though, where if it consolidates above like the highs, that's more like a long trap if it clears out. But then if it's a consolidating near the lows and it breaks out right here, that's a short trap. Or does that only apply to small caps?
I mean, you could trade it long here as it traps. I mean, that
I don't
does
know.
kind of,
I'm
it
just
does
asking.
apply, but I don't know how well. I mean, the thing about big caps is that it tells you the direction. It's harder to fool you. It's not like it's setting up like a small cap where it's like, I'm going to go up for an hour and a half today, set a major trap, and then fade the rest of the day. This
Right.
is usually like, no, we're selling off AMD right out of the gate today because of the earnings came out or something came out and it wasn't good. You know, it's kind of more clear, I would say. And that's why I like trading big caps is it's more clear. It's less tricky. That's why I've always kind of enjoyed big caps. But yeah, so then finally once it does this here
Wait,
and
real
here,
quick. Can you explain what KF Stevens said? He said if
AMD
AMD
below
107 was a stop pick, big players buying up stops to go long. Do you think that's what it is instead? Not
big
an
players
actual
buying up the stops to go long. Well, to go buying up the stops. Steve, can you explain a little bit more on that? I mean, essentially right here, when it consolidates and then there's people going long here, there's people going long here, whatever, and then they start to go up. What do the short sellers need to do? We know the short sellers have been in control this whole time, right? They need
Mhm.
to shake out all the big players one more time, or all the, excuse me, not big players, all the buyers one more time. They want to trap all these buyers one more time. This is another great opportunity to trap the buyers because the sellers are winning the game. So they're going to trap the buyers. So consolidates here, it starts to go up. All the buyers who are going long down here, they saw this 107 level and saying, oh yeah, this is a great spot to go long. What do? They trap it one time and then they shake them all out. And why does this go down so fast? Because we're hitting all their stop losses.
Yeah.
They were shorting it right here, the sellers, and then the buyers did the rest of the work by hitting their stop losses because the buyers turned into sellers when we hit their stop losses. So it shakes it all the way back down here. And then when it goes back up again,
Wait, buyers turn into sellers from up there at the 108 level?
well,
Or
if
area?
let's say I bought it here, or I bought it, let's say I'm like chasing into it and I just thought it was a good long because it said to discount and I'm buying it here.
Oh,
But
the
then
breakout
I
kind
set
of.
my stop loss right here. Well, when I'm going long and the buyer and I'm a buyer and the stock goes down and hits my stop loss, I'm actually selling out of my position. So
Okay.
I'm selling the stock down.
Oh yeah, yeah. That makes
Yeah.
sense.
So that's
okay.
why it drops down like that so fast is because
You would
this is
think you would think though that right here where your mouse is, there would be more selling pressure because that was the main stop for many of the longs on that dip.
well, I think that this elevated volume, this was them hitting the stops. And these guys who are the pros that are the sellers, all they had to do was do a little bit of selling. You know, all they had to use was just like a few 100,000 shares to trigger the stops of all these buyers to do the rest of the work. You know, they're wanting the other side to do the work for them. You know what I mean? So
Yeah,
yeah,
but
so
did
this
they flip bias as soon as they broke that?
well, yeah, exactly. So they let it sell back out, and then now they decide, okay, guys, we were the sellers long enough, we can flip back to going long, and then they
Is there
start to
any
buy
rhyme or
back up.
reason to that, or is that just because they wanted to switch? There's got to be a reason for that, right?
I mean, they flip bias all the time. I would say they just are changing directions of which way everything needs to go. You know,
Yeah, but
when
like
they
if they have a reason that could help me at least understand like the kind of manipulation they would play.
OTC or somebody want to chime in on market maker reasoning on why they flip bias? That's $1 million question. I would say.
Is it? Yeah. Wait, so well,
I mean,
Steven
they're
was saying
playing
something.
both ends of the field. They're the guys trying to fill orders. So as they can see, when they got back down here, there were maybe not as many sellers because it was so extended. We've exhausted all the sellers. And then now it's time with all the sellers exhausted to say, okay, guys, there's not that many more sellers. Let's go back long. And then they start to buy it up. You know, buy
Volume
back.
works kind of the same though, a little bit. Well, there's that red volume candle, sure, but other than that, the volume seems fairly relatively the same.
Mhm.
I'll chime in. I think Mark I know you're trying to figure out manipulation and all the, things you're learning from Trade the Matrix, but there's a point where you have a diminishing return of investment, right, on your thought process, and you just got to step back and think supply and demand. Like go back to the simplicity of it. I don't want to comment too much on this one because y'all are on a 1 minute and a 5 minute on AMD, right? So there is no strength in this chart. I would think that you'd at least be looking at a 5 and a 15 or a 5 and a 30 to know what kind of actual levels you have to play off of. Like I agree with Steven, he's saying 107, there's a lot of stops below. Well, it's hard to argue that on the sense that 107, a whole number, is going to be a psych level. And then if you scroll out, I don't know, go to an hourly. I don't trade AMD very much, but look at what you have there. You have a W pattern, right? Backing. So that's an accumulation phase. How do I know it's an accumulation phase? Well, if you draw a trend line from the top of the volume profile way back there down to the J lines where the W broke, you just broke a major trend right there, right?
Right.
And so you had an accumulation phase on that W pattern from there backwards, right? Because the market maker, the whale who's buying that up, is not going to allow price to go too high. If he needs, let's just say 10 million shares and he buys them all in one instance, supply and demand, he's going to shoot price up. So he's got 10,000 today, 10,000 tomorrow, 20,000 today, 30,000 tomorrow, and he's accumulating. And then it gets pushed up, right? So it's all, I'm analyzing this in hindsight because it went from 102 to 122. So there's obvious accumulation there. And then look at the volume profile, right? That they were able to break through that 115 level where there's a lot of volume. That tells you that this is a strong move. And then of course it gets up, and what happens at 125? Well, look at the volume profile. There's a void. There's no supply. And there's no demand below it, right? What is the demand? 120 has a level of demand, but it's an isolated occurrence. So if that level, if the guy who's down at 115 with that 3 stack, if he doesn't move up to 119, 120, this thing's not going to 130. And then they break in March, right? Break down the hourly J lines.
Okay. Well, I mean, in
I
regards
think
to like
I understand you're trying to think of how manipulators are doing their thing, but also step back and think just in simple terms, think about supply and demand. Yeah.
Okay.
Demand equals volume. Now, if you go back to that 1 minute chart you were looking at, right? So look at that instance. Okay. So that flush candle, look at the volume on the triple bottom just left of that right there. Look at the volume, the red volume there. Okay.
Right.
Now go to the flush candle and look at the volume there.
It's about the same.
It's about the same, right? So what is that? But look at the volume in between those,
Lower.
right? It's lower.
So there's just not as much demand.
But it's constant.
It
It's
is-
constant. And and in that instance between 950 and 1015, there was, you can see in the volume profile that there's someone there not allowing price to get below 107. And so that's where I think that if Steven wants to chime in, that's where I agree with Steven, where he's saying that they're just clearing out the weak hands. There's a big player sitting there at 107. He's filled his order, and there's obviously not that much because we're talking about a 1 minute chart on a multi-billion-dollar float. I'm assuming AMD is, or in the hundreds of millions. And that's only a 10-minute move there, 5 minute move, something like that. But then there's a clear out, a wash out, shaking out the weak hands, and then go higher. Right? That's supply and demand.
But that clear out, you know, that like when people say clear out to me, I just assume manipulation, but that's just purely supply and demand, you know, on that instance.
Well, no, clearing out is especially these days, as you got this Robinhood trader a couple years ago or last year, whenever COVID, you got a lot more emotional. like the market is just emotions, right? And you've got a lot more young emotional people in the market thinking that they can turn their $2,000 stimulus check into a $2 million payday. So yes, manipulation is at an all-time high, even in large caps. It's not any different than it was 10 years ago, 15 years ago, but because of the lack of liquidity in the market right now, overall volume is down. They're having to manufacture moves. So this is a painted chart. This is
Right.
a manufactured painted chart. You got people getting long at 107 thinking it's a psych level. Their stops are below 107, 10, 15, 20 cents. If you're a smart guy, you realize this is a much larger stock. You're trading a higher time frame, and your stock is going to be $1, $2 below, right? And you're going to work your size into that. If you got something at 107, you're expecting this to go to 105. So you've got enough bullets to load yourself up into 105. If you get a 107 fill and it goes higher, great. You just got a nice trade. Unfortunately, it wasn't your full size, but you take it. But now you're not falling victim to the fish trap, right? Look at Rainer Teo. He uses that analogy, or that visual analogy, of a fish net and a bunch of fish getting caught in that net. Well, this is the fish net, right? The weak hands get shaken out below 107, stop some people out, and then they go. So thank you for the liquidity. Now we're going up to find some other liquidity
Right. Okay.
on a 1 minute chart, right? I mean, your mentality is very small cap oriented, so the 1 minute chart makes sense to you. But this is, again, this is AMD. This doesn't, like, intraday traders get chopped to hell on stocks like this if you're not good with technical analysis, or if you don't control your risk management and emotions. And AMD, of all the large caps, is one of the highest manipulated stocks in the market. And if you don't believe me and you need to validate that, go back to AMD when it was around the 50 mark, when it was around the 40, 50 mark, and watch the replays on those days, and watch how that ticker would jump. Even when it was in the 50s, it would jump $6, $7 in a matter of 2 minutes. But they would do it on completely manipulated moves. So whoever is running this ticker, who's been running it since it became a hot item, is doing a masterful job of cashing in on manipulation.
And that's why I like to trade AMD, because it's kind of like a big cap, but since it still is so trappy or manipulated, I can spot those signals and I can use those as clues to my trading system. And I can go with the direction, using Jay's system, and then I can spot these traps or moves. So that's really true.
I don't know, like, we just talked about manipulation, but then before that, you said just to think more simplistically about supply and demand. But then when we just talked about manipulation, my mind all of a sudden just went to that.
The manipulation and the supply and demand go hand in hand.
In hand, yeah. But
so, like, here,
simplistically,
we're not going to just go straight down and then just go straight up, right? That's too easy. It needs to say, okay, if this is the demand zone that the buyers are creating, well, the sellers, I told you, were in control. So they let it go up a little bit, and then they say, ha, 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 I'm going to trap you one more time. And then boom, they drop it. And then they retest that demand zone, and they retest all those buyers to say, are you really demanding this price? Do you really want to buy here? And then they say, okay, well, it got through 107, which is just clearing out someone's large order, like OTC saying, we're looking at a 1 minute. And then they do want to buy it up a little bit here. So they start to accumulate it up. And maybe it's the same exact person, maybe it's the same exact market maker playing both directions. That's where we don't know, because it does end up coming back down and doing another J-line rejection right there. But it kind of chops the rest of the day here. So,
yeah. Were they bid propping everything on that move to the J lines or whatever that purple line is?
It's possible. Like, if I was the seller, here, and I got this great move out of it, and I'm a market maker, it's very possible that these guys are flipping a little bit long to try to hold it up, to move it back to the J lines, to then flip back short. I mean, these guys are moving.
Look at the
Right?
book map. What does the book map tell you right there?
I mean, they were
Book
holding it
map.
up right here.
Yeah, volume's coming in. There's a big green dot right to the left of that, right there. Volume comes in, big green dot. Then they curl it back down, and look what you get again, that green dot to the right of that. They try to push it down. Volume comes in, green dot. That's bid support. That's bid
And-
prop.
Yeah,
And
that's
then
hidden buyer.
the seller gives up, right? The seller's like, okay, I'm not pushing this down. Seller gives up, and it starts going back up. Then it hits a resistance level to the right of that, which is that big heat map up higher at a little lower, right? In that triple top. Yeah, right in there to the left of that, right? And then the heat map's far left, right? So you know there was a seller sitting there,
And look at what
comes down,
OTC's,
checks that price, and then look what happens immediately. Big green dot with bigger volume gets right above that level.
and look
And
at what
now it's-
OTC is pointing out, you guys, about the big green dot. Look at the volume for the rest of the day. Did we see any buying volume this big earlier? No, I mean, at the pretty much near the open here at 9:30, we saw that. But if I take out the opening snippet, because that opening candle always messes up the whole bookmap kind of chart with that green dot and the volume, it kind of throws off all this and the size of all these dots. If I scroll on my mouse wheel forward and I take it out, so it's like kind of cut off, we can see that this volume dot, sorry, this volume was some of the greatest buying volume we saw, you know?
And
So
if you step back from a macro perspective of that chart, like look how far it's gone down already. You've already gone
Yeah.
down $4. So you've got to have, you've got to have some sort of mean reversion.
and that's just on the day. I mean, look at where it's gone down. Look how sharp it went down over a 3-day period here, you know?
Yeah, and would you say like that mean reversion, to small cap, big cap, whatever, that's dependent on the market cycle. So obviously we talked about the trading zoo last time. Eric, I don't think you were there, but it's like trading zoo was talking about how in this kind of market, you know, small cap was going up like 200% or something, or let's say 50% before it reverses or something like that. Same thing could apply with big caps. Would they, is that usually why it's important to understand what the average is in regards to the kind of higher day or lower day that the market is currently going through in order to bottom ticket or top ticket, like, or around that area? Not necessarily.
You're crossing over to another world though, because I mean, now you're saying small cap. If there's a large
Not just
cap,
small
that
cap, but
moves
like big cap.
200%, if there's
Yeah.
a large cap that moves 200%, man, I quit. I quit this game.
Yeah, like this
That's-
GME.
Yeah,
But-
that should be impossible. I mean,
No,
yeah,
no,
black swan.
That OTC, that did happen. It's called GameStop.
Yeah.
Yeah, but it's a black swan. Those are
No,
outlier.
not necessarily small cap. Let me go back to big cap real quick. Let's say, you know, I measure, you know, 100 days of AMD, and then the new market cycle started back, unless market cycles aren't a thing in big cap as much. But, and then I'm starting to find like in the past 2 weeks, AMD specifically has been going down and reversing around negative 5% from the open or something like that. That's usually, if I see that in the past 2 weeks, that's when I usually start looking for like any bottoming or consolidation in that area before I start flipping along, or any standard deviation of that. That's how you make use of the data for that one, right? Or just fibs, I guess.
Oh, I didn't, can you repeat the question?
I think all he's saying is that if there's a common occurrence in his statistics, correct me if I'm wrong, if there's a
Yep.
common occurrence in your statistics, then you're interested in a trade, which, yeah, that's your data.
Yeah, that's what you said, right?
Of like a measured move?
Yeah, with trade
He's
OTC
just saying
last.
if he tracked it, if he tracked a ticker and it did on a consistent basis, the ticker on a large cap made a negative 5% move and then reversed, right? And he tracked, I don't know, 20 trades, 30 trades, a substantial number of trades. And he saw that at negative 5%, there was a reversion back to 50% of the move. Well, if I see that it worked, the last
That's
30 days it worked 20 times. Well, that's a good probability that it's going to happen again. Take the trade.
Yeah,
But
like
some-
that's the mean, and then you have the obviously the standard deviation of that. So let's say like, you know, obviously with the mean, 50% of it doesn't reach that, and 50% of it goes above that. And so then you do like the math for whatever the standard deviation is, so that, you know, the 75% of them does meet that level or that area or whatever, and then that's when you start positioning, sizing in, and as it gets closer to that mean, you start sizing in more, and then once it gets closer to like the 25%, where only 25% of that ticker goes above it, that's when you start sizing in bigger, way like really big, and then after that, you know, that's when you start, you know, letting it ride above just based on the stats alone.
Yeah. Yeah. I mean, it sounds like you got some statistics to play off of. And I would, if you're not confident in that, what you're just describing, just keep tracking it until you build confidence in it.
Yeah. And with
Yeah.
big caps, I'm not sure if that would apply so easily because you know, each day on a big cap, it might be a flat day where we're barely moving, or it might be a day where it's getting real volatile and Tesla moves 7% in one day. But maybe if you tracked that based on all the days where Tesla moved 4% or above, and then you're doing those kind of measured, you know, statistics, that could apply.
Yeah, I feel like I think I learned that a couple of years ago from the short bear, maybe, where he does base his position on something like that. Like that's one of the ways he positions his trades, I guess. Feel free to fact check me one of these days, but that wasn't really my original idea. But that's in regards to like finding the typical average mean for tickers or the same ticker in a time frame of like 50 days or something like that. No matter what, if you find the mean and the average, it doesn't necessarily matter if it's a new market cycle, would you say, whether it's earnings or not, especially if it's just a momentum stock. But we'll see.
You'll have to show me some examples of that, and if you've got a few things, Mark, I'll look more into it.
Yeah, I'm working
That's
with
not
Toptic.
something that I pay attention to, so maybe it's something I should research.
Yeah, I'm working with Toptic on creating a spreadsheet on that. Right now, I'm focusing on the small cap. I'll be doing the big caps.
Cool. Yeah, I've been tracking with Toptic the J lines and stuff.
Yeah, that's why I was wondering, like, for me personally, before I did J, I was doing, you know, the standard deviation, the mean kind of positioning and the exiting, because you can also do that for exits. Like, okay, I bought near the high day. Now, if this is a red day or something like that, what's the average low day, and how long does the low day usually last? What's the percentage of the low days occurring in the midday or afternoon or something like that? Or what's the average amount of length for it to reach the low day if the low day is after the high day time? And then after that, I was basing it off the standard deviation again. Like, okay, I'm at the high day where I bought at 480, and stats show me that right now in the market cycle, the low day that occurs from the open change is like on average 15%. So for this kind of float, so then that's the mean. That's the 50% above and below the tickers that meet that criteria. So and that, again, that's 75% where it meets. That's when I'll start taking out position. I'll start taking out partials, and then once it reaches that average, I'll take out most of my position. And if it goes even more below that, that's more icing in the cake. But I was playing around with that much more than before than J lines itself. So I don't know which one is better than the other, because that's not my idea. That was from a professional trader too. So I'm not saying that mine is better than Jay's. That's another person with a different strategy of partialing in and out. So
Cool. Yeah, that's really cool. Anything else we wanted to go over today, you guys? Any other mistakes we wanted to talk about? Um, Anything in particular?
OTC, share the chat in a general chat.
Yep.
Oh, which one was it? Where was it?
In a general chat. Ah, you
Gen
deleted
chat.
probably.
In general chat?
Yeah, you tagged
Yeah, I
it, but I
already
think you deleted it now.
Oh, did you want to, oh, there was a chart there?
Yeah, I can put it back. I just thought y'all were done, so I don't want to leave it up. There you go.
Okay, OTC, you want to walk us through this? What do we have here?
You got it?
Yeah, right here.
No, just look at the regression channel, right? Linear regression channels are built on standard deviations and retracement levels, right? Outlier moves. And so just look at how perfectly the chart is being painted on the linear regression channel.
Yeah, that's
And
awesome.
then the outlier move happens, and what happens to that outlier move comes right back to the regression channel, right? So it's a good opportunity to recognize a reversal.
Right.
Yeah, I mean, that thing worked perfectly back to the bottom of the channel.
And that red candle, the big red candle, after like the push up I saw before, where I'm in on the top tick of, one candle too early, so to speak. But that red candle that dumped, if you saw the way they manipulated the speed of the tape and that clear out, like that is the perfect opportunity to shake out the weak hands, right? And it went against me $2. So if I'm not sized accordingly, this thing goes $3, $4, $5. It's can be a painful loss, right? So I think I posted that in the chat room, in the boiler room. Like, it's important to recognize the average true range of one particular candle and make sure that you're sizing accordingly, because you can see back when it made its initial push from 2880 to 32, I mean, the size of that candle.
That third bubble?
Yeah.
Okay.
Look
that
at,
one.
look, it went from the bottom of the channel straight to the top of the channel in almost one candle. So if you're not sized accordingly, a move like that can cause you to stop out because you're feeling the pain.
That spread must have been huge because of the liquidity. Or at least it looked kind of liquid.
These are the tickers I like. Last week I talked about ALLG, right? Those are the tickers that I really stress with you guys. And these are the tickers that Jay says don't get in front of. Like the other day, IGMS, right? That thing ended up moving out of the blue. It ended up moving like 90% or something like that, because they're high value price point, they're low liquidity, and the spreads are gnarly at times. So yeah, I like these kind of tickers because I don't need to put on a lot of size to get $4 or $5 per share in a quick move.
But that kind of risk also applies to the reward that you potentially could get, though. I mean, I guess since you know how to manage it, it's fine. But I think
Well,
not so bad.
I was risking $2, and I think I got, I don't know, $5 per share. But I was risking $2 on a relatively small size, right? So I was really risking a dollar amount. I was risking $2 in terms of a parabolic move. But as you can see, this was more of a tape read because it went against me. I think my average was what is it said 36.80 there, so I think my average was like 36.60 or something like that, and it went against me to almost 38.60, right? So a lot of this is just tape reading and being able to sustain the erratic move. And this was I don't remember. Yeah, this was a breakout from yesterday, and that's why I traded it, right? If you go to the same ticker on the 30-minute chart real quick. Or even on the daily, IMTE. On a 30, let's see what a 30 looks like. If it shows what I'm trying. Okay. So look at yesterday. Okay, so look at yesterday's move. The previous day's move. Look at the volume on it, right? Consistent higher volume moving the price up. And then look at the opening volume on today's move. Consistent volume, but much lower. So once again, simplicity of supply and demand. Demand equals what? Demand equals volume, right? If you don't have enough volume,
Then it's gonna die
demand
down.
to move higher, then it's got to come back down, retrace, and find new demand. So it's constant volume. It's getting chopped around on the lower time frame, 5-minute chart. And then all of a sudden you see this rush of volume that still doesn't compare to yesterday's accumulated volume. They do that fake breakout and then flush it. But I think what I was showing here is really the linear regression channels. Is a good tool to.
Do you draw those? You don't draw them on the 1 minute typically, right? Or in
No,
this case,
this is an edge. So this is a study that I have specific. So there is if you go to the tools on the bottom right of TOS, oh, sorry, this is an image, right? But there is a linear regression drawing tool, but there's also a study. If you go, to studies and insert a study on TOS, this is a study. And I have a particular settings on the study that I'm not willing to share because it's an edge, but you could probably, just having this chart, you can probably back test it and figure out what those settings are. Because I did the same, just like Mark is saying, right? There's very few edge out there that is really like even short the bear, whatever his name is, short bear. None of it is his edge. He's taken someone like all day holds or some old school. No, all day holds. Another guy, ADH. Yeah.
Yeah, he
You
was in the
guys-
same Mad As room.
Yeah, he's taking. Well, all day holds is one of the old school guys who Short the POS learned from, Nate McCod learned
Never
from,
mind.
some of these bigger traders learn from all day holds. All day fader as well, trade the matrix. Like they took their, we're all taking our edges from someone else.
Yeah, I could probably backtest that if the linear regression is a constant variable.
And if you think this is an outlier, I can show you LGBN. The long off of 1406 yesterday was perfect. I can show you how Clover rejected the linear regression channel. It popped over the outlier move, and it came back to the top, rejected twice, and then on the third time, they put in volume with divergence to push it higher, and then it failed, went all the way back down to what, 250, 260, something like that.
Isn't it that when it breaks out to the regression channel that you basically target like almost the same length as the regression channel? I mean, if you're long. So then if you're short, you may want to enter, when it reaches 1 hour of that regression channel to the upside.
I just look for, like, I don't get very numerical about it.
Okay.
I just look at this chart and I see one rejection, right? One outlier move down to the downside, then support, another rejection, third bubble, and then it comes back down, consolidates. And those are the gray ones are the 5-minute J lines. The green ones are the 3-minute J lines. So it shows you that as well. Consolidates, goes back up. Look at that wick over on the 4th, 5th bubble. right? Comes back down to the middle point, right? So when it doesn't retrace all the way down to the lower deviation, standard deviation of the regression channel, and it bounces off the midline, then I'm interested in that outlier move if the right volume comes in. And sure enough, that's what it did.
Okay.
But I also was not going to get in front of this because I know that these low liquidity, large spread stocks can move a lot further than you think. So I wasn't going to try. I wasn't going to mess with it around 34, 34.26. Because if you measure the move, like the third bubble to the fourth bubble, that was $4, right? It was 34 to. Okay, so just from that simple standpoint, I'm thinking this thing's going up to 38 before it reverses. And sure enough, right? Almost
Okay,
every
yeah.
move from channel end to channel end, channel barrier to channel barrier was a $4 move, right?
Oh,
33 to 29, 34 to 30. Then if you look at bubble 5 and 6 with just disregarding the data up at the top, that's 30, that's 33.5 down to 29.5, $4 move. And so that outlier move from the top of the regression channel, 34 up to almost 39, there's your $4 move. And then 38. This one I got even bonus because I was going to take majority off at the top of the regression channel, expecting it to bounce again. Right, but it halted down. So
how come you got a 36 though? If you knew that it was gonna be a $4 move.
well, I was reading the tape. I didn't know. It looked like they were rejecting. I didn't think I would get cleared out that high.
Okay.
The question really isn't why did I get in at 36? The question is why didn't I add on the flush of 38? That's the question I'm asking myself.
That's true.
And the simple answer is I don't want to fiddle around with this spread, right? Because that
Yeah,
spread
'cause
is 40, 50
I was
cents,
wondering.
and
I
I'm
was
getting in
wondering
on the
about that.
offer on the way up.
Yeah.
Okay. Okay.
I was wondering about that too, where you said you're risking small position and you're risking like $2. So I'm just gonna assume that's like your 1R. Now, when you play these kinds of moves, you're usually looking for this, right? So I'm guessing was that 36, 34? That's 1R right there with the same kind of size. And then what is your ultimate target usually the bottom of that regression? So that's another $4, 4, 6. So 6,
Yeah,
so that's 0.5.
yeah, I averaged 550. I averaged 550 per share on this games.
Yeah, but all in
But
the
the
same.
thing is that my sizing on that push, the 36, was small enough to sustain a higher R hit. You were talking about it earlier, the fantasy orders, right? I do the same thing. I just call them EOs, engagement orders. They force me to trade. I put on enough size to force me to trade. What I missed here, because I was, I don't know, I got big eyed. I don't know, deer in headlights. I don't know. What I missed was the add on the flush.
Yeah, see,
That would have made my R's. That would have made my R's significantly better because at that point, as soon as I see that flush and I'm adding on the bid, I'm not even giving that break even. So in retrospect, once it's an adjusted strategy, my risk is zero. I'm risking zero to make $5 a share.
Yeah, that's what makes sense to me. If you didn't do the ad, and you just let the like that's like, and you let it stay in that same kind of size. I was like, I don't. Is that worth the risk? The $2 upside, but for another like $2
Full
downside.
size?
No, for that. If you left that like fantasy order and it was you let it stay that same. You didn't add. But if you were planning on adding in that flush and increasing your reward significantly, I can definitely see why this is an edge. A scary one though, for me personally, psychologically.
Yeah, I
speaking,
wouldn't recommend messing with it, but unless you've watched price action on these. And I only play these on day 2. That's why I went back and showed you day 1 on the 30-minute chart. Because I'm playing the I'm playing the manipulation that they put in most of their volume previous day, and then they're gonna do this outlier move. Why? Because they want to sell their liquidity from the previous day, right? They want to sell it as high as possible, right? Buy low, sell high. They bought low yesterday, previous day, and now today they chop it. They're still accumulating some people. Not a whole lot of people in this, but enough to hurt you, and then make that outlier move, sell that liquidity to chasers, and then bring it back down to the mean reversion.
That's honestly, that's one of the most confusing. Like I should clarify. Like finding stocks like that is one of the most confusing ways to make a watch list for me, because I never find that enough to put in my watch list. It's usually some guy in the room saying it. But like, how do you typically find that? You just track every single day two that happens with a stock that had a day one.
So I think most small cap traders fall into the trap of the shiny object, right? What's
That's
on the
me.
scanner? What's on the scanner? What's the shiny object? And I've realized from my statistics that when I focus on the same tickers for multiple days on end, if they have a decent range, you know, and I think Eric does a wonderful job of this. If you look at his charts every day, it's almost always AMD or Tesla. The only reason he trades an MU is because there was news on it and there's a catalyst, and he's trying to catch a piece of that catalyst move. But on a daily basis, he's pretty much trading Tesla and AMD, maybe a couple others, I don't know. But that's not me tracking Eric's trading. That's just me recognizing a pattern that he trades the same ticker. So in that sense, I'm constantly watching FRGE, ALLG, ISIG, IMTE, SKYH. There's two others right now, DRTS and IGMS, right? They're all very similar tickers, high price, low liquidity,
Okay.
massive spread.
Bigger cap.
Those don't fall off my radar all day. The only outlier plays I typically take are those halt and fails, which I love to take, like USX yesterday, right?
Okay, you don't really do like the whole ATR tracking for small caps. It's usually the bigger cap stocks. Then that makes sense.
I'm just trying to, right now in this market, like March has been a very tough market for small cap traders. Even people like Moaxian, or some of these guys have been trading for 20 years that make a killing, right? That make 100, 200,000 a day. Even guys like him, like I know he was red on the month of March, not by much, close to break even, but he was red, right? So don't be discouraged if March was a tough month for you in the small cap world, because it was a tough month for most people.
Oh, good.
So my point to that is that I'm just trying to stay away from the shiny object, like stay away from LGVN on a backside day one, stay away from triple L manipulation, right? Unless you're comfortable with the day two trade, that's the trade. Stay away from the if you know a ticker that's coming back from back in the day that's been highly manipulated, like LGVN made a much bigger move than most people expected, right? And so when you see plays like that, like I'm not even looking at the short on those, right? I'm long a little bit, swing LGVN, waiting for this thing to go up to $20, because if you look at the daily chart, it's got room to definitely 18, right? And so it made a nice move yesterday. Hopefully it pulls back to 13, 14, add a little more, right? Like you were saying, right? As it's moving the bid up, even if it's intraday, it's slamming people down. If you step out and look at the larger time frame, it's still an uptrend. So look for that pullback on a larger time frame. Put a little size on with a wide risk and let it run. See what happens. Maybe you catch Maybe we catch a GME. Maybe we catch a black swan event. Maybe it's a liquidity trap. You know, up to 100. Who knows? Might get lucky.
One of these days, eh?
Just don't get in front of the hot chick of the day on the short side. Jay does an awesome job of at least telling us, hey, don't get in front of this. Don't get in front of that.
And then he proceeds to top ticket.
Extensions. All right.
Yeah, I don't remember what it was from, but I'll have to think about it more. But when you say don't get in front of the hot chick, right? It was kind of like this dating coach guy. I think it was like some YouTube video or something that I was watching.
Oh yeah, you sent it to me.
Oh yeah,
If you
the one
look
I
in our
sent you exactly.
conversation, yeah. If you look in
Yeah,
our
and you
in our
know what he
DMs there.
said was, you know,
Yeah.
this guy he's a trader, and thank you for reminding me. The guy's a trader, and he was a coach, like a kind of therapist, a dating coach for men and women. And he had a lot of men come to him that said, "Oh, I want to date a good-looking girl." And then the guy asks him, "Well, have you ever dated a good-looking girl before?" And then they're like, "Well, no." And he's like, "Okay, well, you know, it's like a scale or a pyramid. You know, we got to start by dating, you know, not good-looking girls first, like, and practice and build up to dating a good-looking girl." And I was just laughing because you're saying don't get in front of the hot chick, and that's the same thing. You gotta build up to a lot of these things, and that's how trading is. You got to build up to a lot of these situations. I used to get so frustrated with myself when I would make mistakes on not being able to trade a trend or catch the good move, or trade correctly. And it took a lot of time, and now I can uh, do better, and I can put myself in better situations. Like the example on AMD that I was showing you guys, I used to not be able to catch those moves. I would somehow create a mistake, and then, just to show you the trade from Friday, I did a quick stop out here on the first pop, but then I did short it here for the fail follow through and partialed, and I rode this thing all down all day, and I shorted it here after we had that consolidation we were talking about at 107 at 10 o'clock where it popped up, and I saw the resistance, and I shorted it again here on my ad, and then I got another leg down, and just brought my average cost down. But I missed this move here, which was a J line rejection that happened at around 11 o'clock because I was just away from the computer. But, I used to not be able to get these moves. I would mess them up. I would not manage them correctly. And then you just
And I'm
work
willing
on
to
it.
bet it wasn't even based on your technical analysis. I'm willing to bet it was more on your emotional execution. Right? Same thing.
Say it again.
I'm willing to bet that you weren't catching these moves because you didn't understand the technical analysis. Like you read charts well.
Mm-hmm.
I would say that I know from my experience, the mistakes were coming from emotional execution.
Exactly. Right? And not following.
Same thing with the whole dating thing you're talking about.
Yeah. And that's where, we learn these things in trading. And then when we're actually trading, it's like a different person almost there that's like making these mistakes and not following the rules. And that's why it's really important to track your emotion, track your mistakes every day, and just write down, well, what was the major mistake I made today? And then after a few weeks, you're going to start to see a common occurrence. Oh, I keep oversizing at the wrong time. Instead, I should have took a third size, a feeler size, or I kept over partialing and ruining my potential profits, or I anticipated my entry over and over again, and write those down each day. Just the main one or two. You don't need to do some crazy tracking. People always go overboard with their tracking and then they don't end up doing it. That's where with tracking, and this is just me personally, I simplify things. I ask a couple questions. It's like how I went to Top Tick and I said, hey man, like I really like the tracking system. It's, you know, far too many questions for me. I need to answer 4 questions about a J line rejection. Does it hold the J lines? It only holds the J lines on J line rejection when I've been tracking it recently, 35% of the time. It usually goes through and chops. You know, it goes through the J lines. It's not like holding it specifically. Is it testing the J lines multiple times? 60% of the time, yes, it is. So it doesn't just go right up, touch the J lines and reject and it's gone. It gives you multiple opportunities 60% of the time. And is it being correlated to the market? Yes, 65% of the time it's correlated to the market. So now when I'm looking for a J line rejection and the market's going up, I'll actually pass on it because it's like, you know, just a simple thing of tracking this, like 4 questions is all I'm asking myself, you know, and then is it below pre-market low 55% of the time? Yes. And then I'm kind of tracking the R's and the best trailing method. And what was interesting that I found was that on the best trailing method, the majority of the time it was using the 9MA on the 5-minute, but on J-line curls, the best trailing method was the 1-minute 9MA. So, you know, simplify your stats, track those types of things because it really goes a long way over time. All right, folks, let's call it a day. What do you think?
Thank you guys. Thank you.
Thank you.
I need to ask once small caps dies down, I'm gonna ask you a lot more big cap questions. So
I know you guys are having all the fun. This is where this is the point in time where I get so jealous on the small cap traders.
and then everyone in the small cap world is ending red on the month. I don't know if you should be excited about that.
Okay. Well, that's good to know.
I'm red in the month too, so it's okay. Well,
But yeah, this is where I see all the small cap traders like having great opportunities. Like Jay, every day this week was just on the small caps, not really worrying too much about big caps. But it's you know, it's like it's the coming and going with the tide. You know what I mean?
Is it green, like really green in the month? I haven't been keeping watch, honestly.
Is who?
Jay.
Yeah.
Is he green on the month?
Yeah.
Dude, he's always green on the month.
Okay, I'm asking. I haven't watched anything in a while, and OTC said that one.
He crushed it this week. He said.
You did?
Yeah.
I mean, dude,
yeah.
if he loses like one day, he like reassesses and reduces size for the next day. You know, it's his risk management. It's so amazing because he gets these home run trades and he holds them like so amazingly well. And then he gets these huge winners. And then on the next day, if he loses $1,000 or $2,000, it's not a big deal because that previous day he made 10, 20,000 bucks, whatever it is, you know. So his risk management system is just so good, and he's been doing it for so long. And that's what I'm saying about my trade on AMD. It's like it put me a year and a half ago. I couldn't have nailed that trade. Where Friday, yesterday, best trade of the week. You couldn't have traded it much better. I mean, you could, but for my trading system, you couldn't have traded a whole lot better. So that's what gets me excited is when I get those really awesome trades. Not even just about the P&L or anything, or having a green week or consistency. It's about having those really good moves, because I used to want to get those big moves and catch the whole move and get a piece of the whole thing. So you guys got to just keep practicing, keep tracking, improve entries, improve risk management, and track your mistakes, because we all have different mistakes, and they're not that different. They're all actually fairly similar. Oh, I oversized, I anticipated, I did this. Track that, and you'll start to see over a 2-week span that 3 or 4 of your losing days were from the same oversizing at the wrong moment. You know what I mean? So track it and follow it a little closer, because if you want consistency and you want to become a better trader, you can do it. It's not hard. I mean, we're clicking buttons on a computer here. This is the best job you can get, so just keep working at it, you guys, and have a good rest of the weekend. Study, message me if you got questions, and I'll see you guys on Monday.
See ya, guys. Bye.